Welcome to this webinar by CustomizedTrading.com. This is about advanced position sizing done automatically. Position sizing is such a critical element to trading, and yet so many traders ignore it to the damage of their own account. And we think that it's a critical element. So we wanted to cover that a little bit. Position sizing, a lot of traders just use the easy way out and they do a fixed trade quantity. So they take their account and they trade 100 shares regardless of whether it's a $200 stock or whether it's a $10 stock. Or they trade one futures contract. Or they trade, a certain number of units in Forex, but always the same. And that just doesn't make any sense at all. Your risk management is so important, and that's the poorest model you can possibly follow. Now, a lot better model is where you use volatility and fixed risk amount. The fixed risk amount means if you had like a $30,000 account and you wanted to risk 1% of that account per trade, then your trade risk is $300 between your entry and your stop loss. And the volatility part is you're saying that if you get into a trade, you don't want your stop loss to be more than 2 ATR away or 3 ATR away. Then you basically take the ATR, which is average true range, or the range, high to low. You multiply the average high to low over a certain number of bars times 2 or times 3. That becomes your volatility. That's the amount of distance that you need from your entry to your stop loss to stay in the trade. Then you divide that out with your $300 that you calculated, your balance times the 1%, divided by the volatility figure, and you get your actual number of contracts or units or shares that you're going to be actually trading. We think that that's a much more intelligent model. It requires some work and effort on the part of the trader, and that's why a lot of traders just don't do those types of things. We think the smartest way, though, is even better than that model, is the live trade risk model. Instead of just an arbitrary ATR range, you actually use the distance in your trade, where if you're going to make a trade setup, the distance from your entry to your stop loss becomes your risk. And then you divide it by your fixed risk amount to get your quantity. Now that's the most intelligent way, but obviously that wouldn't be very easy for the average trader to do unless they use computer tools. Using computer tools is the smart and intelligent way to trade directly from your charts and have that type of dynamic position sizing. Now we have the Euro US dollar up here, and it doesn't matter what chart, whether you're doing futures or equities, it works the same way for all of them. And in this case we have the dynamic position sizing on. We have a fixed entry quantity. Let's change that to instead of a full lot, 100,000 units, we'll do a 10,000 lot block. And we have a $30,000 account times 1%, so we're saying we're going to risk $300 per trade, and we have that set up. So there we go. It's all set up. Now, we want to do this particular chart has had a pretty good size up move going on here off of this base, and it's consolidated a little bit here and then moved up. If we think that trend were to continue and we wanted to set up for a long, we can take these tools, and you can see there's a stop loss, an entry line, and a profit target line on there. And to set it up for a long, we can use the stop loss line and just tell it we want to do a long setup, and it sets up the lines for us in an initial positioning. Then we can take and say, okay, we're going to follow along the base of this pattern, and that becomes our stop loss line. And we put our profit target wherever we think that that's real for our profit target. And then we're saying that we're going to go long here. And what could we do for an entry? If we click on the color or the line, double click on it, and go over to our trend line here and select the color as dark green, that is a buy stop order. dark green. That's a buy stop order. Now we have the buy stop in place. You can see that that's 260,000 units. And that's all dynamic. See, if the entry were there, you could do 160,000 with $293. If it's down here, you could do 250,000 with, it's still around $300. So no matter where you go, it's always around $300, but the difference is your risk reward. An entry here, if we think we could stay above that with this type of an entry, you know, and let's just massage that if we're going to really do this trade setup here. So, like, let's say that that's the trend, but we're going to give it a little extra distance there. We could actually drive this down as the price is pulling back and just continue to follow that until we got a trade entry. And you can see what that's doing is it's giving us more contracts that we can trade with the same amount of risk until we actually finally make our entry. Now there's our entry, 250,000 units, and now we're in our trade. And there's our stop loss, there's our risk, we have a 3.8, and you can see that this is pretty dynamic too, because if we go to less than a 2-to-1 reward ratio, then it gives us a yellow. In other words, that's really not in the sweet spot. It's really not what you want. If you go over a 2, it goes to the dark cyan, which says that's better. A reward ratio of 2-to-1 over your risk is good, but the sweet spot is when you get above 3. Then it's the bright cyan, and it's telling you that that's a good trade. And there's an example of a setup and an entry, and the dynamics is that from this price entry to that stop loss was your actual risk for your trade. And you could see that it maximized your entry in contracts while keeping your risk always close to that $300 figure that you wanted. Now once you're in the trade, it tells you your profit or loss right here. And this is based on your actual entry into the trade, not the strategy entry, but the trade manager entry. So it's your live trade entry based off of this number over here, what it actually is in the trade manager. So there's your entry, and there's your stop loss. So $335, a profit potential of 1,043. And a reward ratio of 3.1. Thank you for joining us in this webinar on position sizing and how you can do it in a very positive and dynamic way and make your job simple at the same time trading from your chart.